Good morning. So we're going to be breaking down the pairs we have for this week on crypto and forex. We're going to also be discussing a lot of useful stuff, right? Example like reading market structure, effective top-down analysis, down to top analysis, break of structure and market structure shift, directional bias, daily ranges, premium and discounts. And we're also going to be generating actual setups that I'm personally taking, and I'll be posting that. And that setup is what I'm actually posting in my private community and in the free Telegram channel, which if you're not there, want to go and check it out. So you can actually start placing the limit orders. At the end of the video, when you see the setup, you can actually start pressing the limit orders that we're going to generate if it resonates with you. Right. So we're going to start with the trades that we called last week. Now, before we get started, I want to show you guys the our entry model, right? So the first thing you want to know about market structure, the next thing you want to know about the entry model. So this is our entry model. What are we looking for? Let's get rid of this whole charts. Let's get rid of all this. So the first thing we are looking for is when price taps into our POI, which is our high probability reaction level, right? We want to see some form of liquidity sweep, then price tap into this our key level, then price form structural liquidity and expand higher. Now this structural liquidity can come in two ways. It can either come after the first break, coming as an incomplete pullback, or form before the break, which is like a structural liquidity. So these are two patterns we are looking for our entry model. But before you look for this pattern, you want to do top and down top analysis and also read your market structure well and etc. Right? You must have context, don't just go looking for this setup. Now, the first setup we have, which is actually an old setup we called last week, right? So what do we have here? We have okay, let's go to the higher time frame. So this is on 12 time. Let's use the daily time frame. Let's try to get rid of. So what do we have? We have price that is bullish. Price is just bullish. So how do you know bullish trend? Higher highs and higher lows. So price is bullish. You can say price is bullish. So price made this last leg of price, right? And we have a little bit of retracement into a discount um order block. Like okay, now we are making mistake. This is it. Let's try to draw this well. Price, higher highs and higher low, then higher high. Right, so price retraced into a discount order block. So at this discount order block we had here now, we had some reactions. So after price tapped into this discount order block, now if you are to go to the lower time frame, you can see the kind of reaction we had of this place. Now, what is this our discount? You can choose to take the discount order block or QMR. I like to use QMR for some reasons. But if it's still the same thing, even though you choose the other block, you can see it right here. So after price tapped into these things, we are expecting price to actually take out this place, right? This is what we are expecting, the normal market structure, right? The normal market structure. We are expecting price to take out this place. So these are our external range liquidity. These are our dream range, our higher time frame dream range. From this low, I think it is low, to this high. So this retracement, we are expecting price to tap discount order block, discount key level, and take out this external range liquidity. So now, as price taps this discount order block, we're now looking for that pattern we discussed. Let me bring it back again. We're now looking for that pattern we discussed, which is either of these two, and we're going to be taking a fixed trade out. So what do we have here? We have this second pattern we have here, this second pattern. So you can see that it corresponds to, we have a liquidity sweep, then price forms structural liquidity, then break, have a market structure shift. We have this market structure shift. At this point, we now set our limit order, and price is currently in a drawdown. Price, we are suffering drawdown, right? But hopefully it triggers us and give us our distance. So this is trade we are looking for since last week. We have been active on since last week. If you look at this, you see it corresponds with distance. So now this is for the first setup on USD JPY. And the next setup we have is Euro CHF. I think it's an active setup. This is from last week. It was taken with the daily time, with the higher time frame, right? So you know the good thing about this strategy is a universal strategy. Right? It works on all pairs and all time frame. If you want to be a scalper, you just have to work your time frame to fit scalping. If you want to be swing trader, long term trader, you just have to do the same thing. Our price is fractal. So what do we have here? If you are to start from the higher time frame now, reading this structure, if you are to go to the um since we use the daily time frame, let's try the weekly time frame. You can see that price is forming series of higher lows, lower highs and lower lows, lower highs and lower lows. So this was a retracement. So after this retracement, we have price come in this other block. So this is not the best trade. I would have liked this trade if it's occurring around this place, right? And what I'm seeing, I would have liked it if it's occurring around this place, but it's occurring at this lower time frame. Now this is a contradicting trade, right? So why is that? Because if you go to the daily time frame, the market structure now makes sense on the daily time frame, but on the weekly time frame, it looks like if you're doing this thing, so you can see lower highs, lower lows, lower highs, lower lows, and this thing. The only reason why I took this trade is because of I felt like it is just so clear. Right, the pattern is so clear. We have a clear structural liquidity, and the good part is that we are just waiting for 1.5 hours so we can start break even. So that's it for this one trade. Now the next one we have running is GPAUD. What do we have? Okay, this is the trade that have hitting take profit. Right, we took this trade last week, right? So first off, let's try to explain this trade because it's good that you know the logic behind it. It solidify your understanding of reading price. So what do we have here? Let me cut you guys here for a few minutes. So this is an update on the challenge we started with the team. If you guys are not aware, we actually started a challenge. The initial goal of the challenge was to accumulate $1 million in profit capital. After some time, I decided to break it down to make it modularly so it can be something that is a 3 months goal. So the goal was to start with the smallest profit, which is 5K, and scale up to 100K in profit capital. So the reason why I started this challenge is to help my students build capital. And we actually started this challenge, I think around late August, right? So this is an update I posted on the challenge. So the first 5K has been passed. The second one is up 3%. And we try to make withdrawal from the first one and use it to buy the next bigger profit, which is 25K. And that's how we scale up. And this is actually a proof of it. I bought the account, my students bought it, and you can see that we actually passed it. It's an 8% profit target. This is phase 2. The phase 1, I've posted it if you scroll up. So this is the second account we are trading, which is up 3%. Right, so that this update was on 13th of October, and the recent one we posted was on 10th of November, which is today. And the mission continues. The second 5K account has been passed. The next 25K account is phase 1 is currently up 2.7%, and the goal we are looking to do is to pass the 25K and make just 3% and withdraw this amount. This is the math here. And we're going to use the profit to buy a 10K at the 100K account and make which will cost $500, then use it to pass it. And at the end of the day, so the goal of this next 3 months is to make 200K in profit funding, right? So if you guys are interested in it, and this is actually the proof of it, you can go through it. You can see this is actually the proof of the next 25K we have, but this one is up 20. This is up only 2.7%. And if you are to scroll down, this is actually a trade that I took on it as I'm about to pass a trade that is currently running that is about to be passed, right? So if you guys are interested, you can reach me out on this Telegram channel. Just click the link to join the free group, and you can even scroll through it to see the proof or see the setup we are posting, and just send a DM to the admin. I'm going to talk to you personally. I see if you're a good fit, and if you're a good fit, I'll add you up. It will cost you money. But if you don't have the money to take the challenge, you can actually start doing the challenge on your own. All you need to do is to subscribe to the all you need to do is to subscribe to this channel, to this free group, and take it. So not all setup I post are going to be that are posted for free. So when you see one, you capitalize on it, get a reliable platform, and set a 1% risk per trade. And if you and build a trading manager. So this is you can go through this pin post and try to do the challenge on your own. It's key you challenge yourself. You want to go and challenge yourself. If you don't challenge yourself, you're not going to make money trading. That's the best way you can make money, by challenging yourself. But if you guys want to join my group, you can actually send me a DM. I think that's the best if you have the money. If you don't have money, just try to do it on your own. So that's it for this. I just want to let you guys know this is what our mentorship is offering. So what do we have here? We have series of higher highs, higher lows, higher highs, higher lows, and then this is a bullish trend. Then we finally have the first next break of structure forming our next structure. This is our main structure, right? So all these things was our substructure, retracing to a discount order block, which is this discount order block. So as soon as we tap this order block now, we went to the 1 hour. I think I used the 1 hour daily time frame. I like to use the 1 hour, right? Is that my personal preferred time frame alignment, right? So let's just use the 2 hours for it to be clear for you guys, right? So just after we tapped this order block, we're now looking for that this night I told you, which is a liquidity sweep into the order block, right? Then either price break structure, either we have the second one, but in this case we have the structural liquidity. Then finally, the main break of market structure shift. This is not break of structure, it's market structure shifts. The difference between market structure shift and break of structure is usually in trending market, while market structure shift is reverse and it have shifted. Sometimes some people call it change of character. I like to call it market structure shift because it makes a bit more sense calling it that. So break of structure is something like this. Okay. So now let me explain this and finish. So we saw our liquidity, we placed our limit order at this point and took our trade out. You can see nothing more, nothing less. We have a fixed take profit. So this is what I'm trying to explain to you guys about break of structure and market structure shift. Break of structure. This is a break of structure. You can see this is break of structure. This is a break of structure here. This is a break of structure. 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 Now finally, what do we have here? Wow, this is now a market structure. It have shifted. It have broke the last lower high, the last in an uptrend, the last lower high, higher low I mean. And finally, what do we have here? We have a market structure shift, right? And price will shift and start trending to the opposite direction. You get the point. This last break of structure will serve as a liquidity sweep, and for you to have a valid market share shift, it must be occurring in a higher time frame key level. That's one. So you want to see a liquidity sweep, then that's how to validate it. And you can look for divergence. Divergence makes it high probability. This is a crack in correlation in case if you guys don't know. So what do we have? A liquidity sweep into a higher time frame key level, then a market share shift. Then you can search for divergence. So these are to spot high probability market structure shift. The rest are just break of structure. So that is different. That is the this thing. So I hope you guys understand the trade. If you guys don't understand it, just keep watching the video. I'm going to be uploading steady videos and you'll understand it. And also leave your comments, leave your questions in the comment section. Now we have explained AED, USD JPY. Let's try to explain AED which is the trade that we are currently active on. And what do we have here? We have on the this is a daily time frame. I was stop taking trades on the daily time frame. It's so boring and too long to play out. But what do we have here? We just have market structure trending, lower highs, lower low, and which one? No, this is not it. Lower high. Now you can argue that price we're going to trade all the way to this place before here. But the reason why I called this one our structure, our swing structure, is because of at least we have swept out this liquidity. Let's try to clear this out. So I would have said that price is going to that this is our current swing, this higher lower high, then this is where you break the structure at this point, not here, not this. At this point is where you break the structure. So all this from this place down to this place is our structure, our dealing range, or you can call it our structure, our dealing range, right? So I when I saw this setup, I was arguing that price can trade all the way up to this place. This is the premium side, right? So okay, let me just leave this now. All right, so now if these are our dealing range, so you can mark out the premium and discount from this place now. So anything you are trading, if you are trading selling off of premium, if you want to sell, you want to be selling off of premium. If you want to buy, you want to be buying off of discount, right? So this whole thing is number one. This whole thing is occurring in a premium side of this dealing range. That's one. And so something a question my student asked me that this is actually a trade that can be traded. You can see this key level here, this demand zone, this supply zone I mean that is formed. Now don't you think that price is going to take out this whole liquidity, then continue downside? And this is a valid distance. But the reason why I still insisted that we can take it really that if you look well now, you can see that this is actually a new range that was formed. Like this range is a new range that was formed, and we can see that we actually tapped into the other block. So why do I still take this range and think that this range is a new range that was formed? That's because of we swept this liquidity. This liquidity has been taken at this point. So um characteristics of a high probability during range. You want to see liquidity sweep. You want to see that it's sitting off bid is on a key level. If you have to take the second order block, you can see that it's tapped a key level. Then it's break structure. Yes, this actually break structure at this point. So this is a characteristic of a high probability during range. Now, I know you guys might be saying, and that's one of the reasons why I took the trade. Another reason is that the entry pattern line up is so nice, it's so clear. The entry pattern we are looking for is so clear. If you're going to go back to the daily time frame, you can see that the entry pattern we have, liquidities will break our structure, then structural liquidity is so clear. So that's the reason why I took this trade. Regardless, I know that even though what now my students say is true, that price is going to trade all the way up to this place, price is going to take all the way trade up the way to this place to take out this liquidity to continue. I believe that price is going to, give us a little bit of reaction. Then if it wants to do that, it can do it. So that's the reason why I still insist that I'm going to take the trade. Although I flagged the trade as low probability. So that's it on AED USD. Then you have AED card. Why do you label it? Okay, this is a new setup that we are looking to take. And let me try to explain this setup for you now. So how do I generate this setup? This is a 1 hour time frame. So we want to let's go to daily time frame to see it. So this is what I just analyzed. Now, what do we have? Price forming series of lower highs and lower lows, lower highs, lower lows, lower lows. I don't get um confused with all these substructure. These are all substructure. This is the main one. Lower highs, lower low. No, lower low, lower highs, lower low, lower high, lower low. So price now retraced all the way up to premium. These are our last daring range on the higher time frame. From this place down to this place is our daring range, right? So what is sitting here is a high is a okay. Should we just use the weekly time frame for clarity? If you go to the weekly time frame, it becomes even more clear. Although the daily time frame is what you're going to use because of you're using the 1 hour time frame, so it should be daily time frame. But let's just use the weekly time frame. It looks a bit more clear here now. So remember the where is that our part? Um, yeah. So now you can see still the same market structure. Now you can see that after these are last daring range on the higher time frame. And what the price did, price retraced all the way up to this place, tapping into this other block that was formed. This other block that was formed, right? Tapped into this other block. Now as price tapped into this other block, and we can decide to go to our lower time frame, which let's use the 4 hour time frame for it to be a bit more clear. I'm going to also explain why I think this trade is a risky trade. So as you can see, as price trade all the way up to this whole place now. That's the reason why I say I won't set limit on this trade. So as price trade all the way up to this place now, what do we now have here now? We are expecting reaction off of this place. We are expecting price to, give us our pattern, sweep liquidity, then break structure, and reform the structural liquidity. So this is why I think that this trade is invalid. And this is the reason why I think that this trade is invalid, and I can only take this trade if when price hits this level. Because something that can happen is that you need to be aware that something that can happen is that price is going to, these are our pattern, right? So something that can happen is that price is going to give us a little bit of reaction just straight out, right? So it's going to give us a little bit of reaction finally. You see, then before it breaks structure, then we now have the bearish, our real bearish entry, which is something that we're interested in, right? So that's something that can happen. We already have a structural liquidity, so this is something that can happen at this place. So we might be able to get our trade out, but since it didn't line up well, and we are trying to buy into a higher time frame supply zone, which is not true, which is not right. So, but this pattern is so clear. Liquidity sweep, structural liquidity. This is actually on the distance. We don't take single week as structural liquidity. So, structural liquidity, and the pattern is so clear. And this is why when I spotted this, and I like it. So, what I'm going to be looking for is lower time frame confirmation, like order flow or candlestick, something, or market structure shift on lower time frame to take this entry, right? I won't be setting limits for that day. So that's it on AED card. And I think there's the one that we had on. Let's try to scroll. I think we have something. Yeah, this is the trade that we have. Now, if you're going to go first, we start with the higher time frame to read the structure. Now, okay, fine, let me explain this. So we start with the higher time frame to read the structure. So as you can see, price is clearly bullish, right? Lower highs, higher lows and higher highs, higher lows, higher high, higher lows, higher high, higher lows, higher high. Now, all this thing was a retracement to discount, right? So, as we tapped this order block, we can now go to our lower time frame. Let's use a 2-hour time frame. And then, as we tap this order block, we are now looking for our pattern, which is our entry model, right? Which is a liquidity sweep, then a market structure shift. We didn't have a clear market structure shift, but as you can see, that price has already, we have something like this. Then this is a clear market structure. But what we have here is a bunch of imbalance, but it still makes sense, right? Because we now have a series of this thing, lower time frame structure forming bullish structure. So we see we have break multiple bullish structures. Now the pattern is still the same because of we have liquidity sweep and it's occurring on this key level. We have liquidity sweep, then break of structure. This is a break of structure. If this one is not clear, this one should be clear. And there are multiple break of structure. And we have structural liquidity. So we are expecting price to tap us in and continue. So I have this limit order active. If you buy with it, you can actually take it. And yeah, so this is the logic behind this trade. Now we actually have something on currency pair, cryptocurrency, which is BTC that is currently trading, right? So we have this trade on BTC. These two trades record on BTC. And what do we have on this trade now? Let me try to explain it for better listening. You can see that this is our last swing structure from this high to this place, right? So price tapped into discount demand zone, right? This discount demand zone. So as price tapped into this discount demand zone, if you go to the let's use the 120 minutes time frame. So price show a little bit of reaction, right? Started trending. Now we have our pattern, which is a liquidity sweep, our entry model, liquidity sweep, then a break of structure, then structural liquidity. That's how we took this trade, right? So that's the logic behind this one trade. And if you have to go to the lower time frame, this one trade you're seeing here is actually a lower time frame trade, right? And let me try to explain it for you now. So what do we have here? We have a daring range from this high to this low, right? From this high, when this range was formed, we have a daring range here. So now price traded to this imbalance right here. I don't like using imbalance. I like just using demand and supply or other blocks, right? So price traded to the price rebalance this inefficiency right here. Now on the 1 hour time frame, or you can decide to use this as price tapped into this imbalance. Let's go back to 120 minutes and mark it out. So as price tapped this imbalance, as it's refilling this imbalance, the imbalance, or you can call it fair value gap. Imbalance is different from fair value gap, but it's actually a key level, right? So as price tapped it, we now have that our entry model, which is liquidity sweep, Then structural liquidity. All these things are all structural liquidity. Then a break of structure, a market structure shift, right? This market structure shift occurred at this place. So we now set our limit order. And this trade was actually break even because I was waiting for one to trade out. So that's the logic behind this one trade and get rid of this. So let's go back to the 4 hour time frame. So this is the active trade. This one is 2.57 hour. We weren't able to hit 3 hour. So I only took a break even on this trade. So that's it on USD, on BTC USD. So that's the setup we have. We have BTC USD. Let's try to highlight it. BTC USD. Then currency pairs we have a couple of these things. AD card. We are just waiting. We are waiting. We're not taking it. And there's one that we have. Right. Let's start to find out one to highlight it. Okay, this is Euro card. Yeah, so these are the trades that we have here. And all these trades is actually going to be posted in our free Telegram channel. If you're not there, you want to go and check it out. Yeah, so I hope you guys learned a lot on this video. If you like the video, subscribe and do all the whole YouTube stuff. I'm going to keep on making videos. If I see a little bit of, if I see interest, like what do I mean by interest? Questions in the comment section. The videos is doing well. You guys are watching the videos throughout and you guys are doing the like and subscribe. I'm going to keep on putting the video, but if I see no interest, I'll just quit. Right, so this is, and I'm going to be posting all this trade in the free Telegram channel, as I said. Yeah, I'll see you guys hopefully in the next video.